Hi, I'm Julie Ferguson. Welcome to the BD Now channel. We are kicking off season 2 with Mike Higgins, a brilliant, member-centric mind, and my go-to when the numbers need to make sense. Let's face it, there's a reason we BD pros are not in finance. Mike dives into what drives credit union income, why sticky products like direct deposit, checking, and online banking are the unsung heroes, even while we're all buzzing about deposits, and why BD pros need detailed monthly reports on new members. He also unpacks the value of analyzing profitability by employer group or community segment, and he shares examples of credit unions having success, one that even has a Bill of Rights. This is a must-hear conversation. Let's go. Hi, credit union friends, and welcome to the BD Now channel. This is season 2, episode 1, and I'm thrilled to bring Mike Higgins to you today. Mike is one of the smartest people I know. Hello, Mike. Welcome.
Hello, Julie. Lower the bar of
Okay.
expectation, please.
I was talking with Denise Wymore, and I had a little, we always say talk, but it was just a text exchange this morning. And I said, I'm recording with Mike Higgins today. And she said, which I think is so true, I wrote it down, your philosophy about credit union financials is so mission aligned. And I am bringing everybody someone that focuses on financials, but bear with me, Mike, you are one of the most member-centric people I know. So can you tell the group, the BD Now community, a little bit about what you do?
Oh gosh, I have a horrible elevator speech, so I'll try to keep it quick and to the point in our time. I have two kind of things I do. One is I have a performance-based compensation practice where we set some objectives and then we reward people for meeting those objectives. That's one thing I do. And then I have another thing that I do. It's what we call member value added, and it's a way of quantifying with specificity how effectively and efficiently a credit union is deploying its resources and creating relationships with members and deep relationships, which I'm sure we'll talk about in a few minutes, to create value. And when you do that in a productive manner, efficient and effective, you can afford to provide better pricing. So you really win on both sides of the equation. We can measure it. So that's kind of a neat thing. And that's, I think, the member centric thing that Denise is referring to.
Mike, tell us a little bit, because we're starting this and we're launching this in January of 2025. So Happy New Year, everybody. What
Yeah.
do we need to know coming out of 24 and into 25?
Yeah, I would say the biggest thing. So I'm going to kind of take it from a financial perspective. I'm going to dovetail it into the relationships. In the last year, the world has turned upside down in terms of what creates income for credit unions. For the last decade and what we kind of called the era of low rates, if you weren't good at lending, you couldn't make a living. And the reason why was, and this is kind of how your balance sheet works, is we make money on the balance sheet. And there's really two what I call spreads on the balance sheet. We pay money for shares, and while we're waiting to loan them out, we can invest them and earn a spread. And then when we loan those shares out, we get a higher rate of return than what we could earn in as an investment, because there's a chance we might not get paid back, and we have what's called interest rate risk, which means I don't know what my cost of funds is going to be over the life of the loan. So during that era, there was a teeny tiny spread on shares or deposits. And so you had to lend to live. Well, that's all flipped upside down now. And you can make a big spread on shares or deposits. And if you lend out, that's still important. I'm not diminishing that. But everyone knows deposits are valuable and everybody wants them. And so that's really what's changed. And so, from a business development perspective, an emphasis on making sure we've got that core relationship with the member, that transactional deposit, the direct deposit is really important. The member where we just have a CD relationship with, we're probably not making money on that relationship. We think we're doing great. Hey, I just got $100,000 CD or a $250,000 CD, and all that's going to do is pay someone's wages for maybe a couple days. We really need that other stuff. That's really critical, Julie, and that's the thing to me that's changed, and that'll be so important going forward. Yeah, and I'll tell you on a couple different levels why it's so important and everyone's after it. In my my performance compensation practice, I'm starting to see credit unions say, Mike, we're going to start tracking direct deposit, number of checking accounts. They're even looking at members excluding indirect. They just want to know, are we really getting that core relationship? Now, the reason why that transactional checking account or direct deposit is so important is if you have that, you know everything about the member. You know where all the dollars are coming in from and going out to. So there's a wealth of information that you could mine there. You could do even things like your own internal credit scoring. Hey, I know if they have a paycheck coming in of this, or even are they experiencing credit stress? I know normally they make these type of utility or routine payments on these dates and they're kind of not happening on one or two of these areas. That might signal something that I could reach out to them for. And then the other reason is once you get that direct deposit and especially get them into bill pay and mobile banking, man, it's painful to move that somewhere else. And so we call those sticky deposits for that reason. And they've always had massive strategic value. It's just economically they were undervalued. And the credit unions and financial institutions that understood the strategic value were always focused on these things. But now those that kind of weren't are say, oh well, this is important now. Well, we'll just go get them. No, no. You, the relation I call those relationship deposits. They're like a slow drip. They're earned with some type of affinity or affection toward the credit union because you're really not competing on price. The things that you're competing on are all table stakes. Do you have bill pay and mobile banking that works adequately? It doesn't have to be super fancy, but does it work? Do I have a reason to like you because I'm giving you money and you're not paying me much in the way of interest? You can't just turn the switch on that stuff on.
Okay. So what I'm thinking for the business development, community engagement, if you're tracking the members that you're bringing in, even if nobody is looking at direct deposit, those sticky products for your own sake, ask for some reports and take a look at that and make that a goal because that's something you can share upward into leadership.
Yeah, 100%. And I've got a story I can share from one of our banks. you know, and I kind of look at the world of banking as you've got your community-sized organizations, community-sized credit unions and banks versus the big players. And the story I want to share is I had a talk with the CEO of this bank, and two things I thought were very interesting is they're really successful by not doing things they can't be good at. I think that's one of the things that we always stumble on. So we want to have all these products and services, but if we do a poor job at four or five of them, then we're just losing money faster. And they say we're only going to focus on things. But one of the things they're really good at is they measure their customer profitability. And it doesn't have to be complicated. I know we kind of touched in our pre-discussion here that this might be a good follow-on discussion, but they measure that. And what they do is they know who they're making money on and not. And this isn't a profit mongering discussion. It's really a depth of relationship. And they know that their customers that they have deep relationships with, all the products and services are being used by their bank, they make money on. And what they do is they identify the ones that they're not. And they specifically assign those to account managers. And those account managers' job is to contact them and do one of two things: either deepen the relationship, or the next time the product or service that they're using comes up for renewal, they price it higher. It's like, listen, we need you to be all in with us. And if you're not, we're going to charge you a higher rate because it's not fair to ask us to lose money in this relationship. And they've been just wildly successful by doing this. Not to bore the heck out of you, but I'll give you two financial numbers that show the impact of it. The first one is what's called an efficiency ratio, which is just how much does it cost? How much expense do we have per dollar of revenue that we're making on a relationship? Smaller is better. Their efficiency ratio went from 76 cents to generate a dollar of net revenue down to 36. I mean, that's cut more than in half. Their return on assets went from 0.88% or 88 basis points to the last few years, it's been over 3%. And it's not because they're gouging their customers, it's because the depth of the relationship and the focus on that. So there's just a lot of potential out there if
Yeah.
you can focus on that from a business development perspective.
Well, I love that you shared that story and that you have a story. I'm a little disappointed it's a bank and not a credit union. I see so much opportunity with employer group relationships. Would you agree that this would be a great place to do this? Because there's a lot of discussion now. Are they still relevant? Um, yeah, the days of serving 400 are gone. We need to be more strategic. We need to be more focused. But looking at the profitability, we have all of the data, right, of the employees that work
Yeah.
at a Microsoft or a hospital system or an education system or any kind of line of business.
Yeah, 100%. And again, I think a lot of the key to that is having you touched on is having a story to sell. Whenever
Yeah.
I travel and go to work in a different city with one of the credit unions or banks that I'm working with, I don't want to eat at an Applebee's or some chain. I want the local greasy spoon. The local. First of all, I like supporting small businesses, but
Me too.
I can go and do that stuff anywhere. And so if I ask the person that I'm working with, I'll say, hey, what's a good restaurant I could go eat at that's local? Usually they're kind of, they'll sit up straight in their chair and their eyes open up. I get this very spirited and passionate response. Oh, Mike, you got to go here and try this and save some room for dessert. Uh, and I think what we have to do is give our business development people and our employees in the credit union stories like that they can sell. My father used to always say, Mike, sales is just the enthusiastic transfer of belief. So if you just think,
Say that one more time.
yeah, yeah. Sales is the enthusiastic transfer of belief. So if you kind of focus in on those three words, enthusiastic, transfer, and belief. So I kind of start with transfer. I've got to understand my products and services because I can't communicate them very well if I don't understand them myself and what are the benefits. And if I can do that, and understand them and maybe have some examples, I can do that in a very enthusiastic manner that will cause others to believe that, hey, I really should think about this or consider this. And I just think that's really critical. If you just put sales in that kind of term, I think that knocks down these walls of, oh, sales is a bad word or a dirty word or anything like that. No, it's not. It's just the enthusiastic transfer of belief.
Yes. That's great. That's so helpful. And I think we do want people to sit up and eyes wide and share the story. Do you have an example? You work with credit unions and banks, I know, across the country.
I'm going to share one of them that I've got some firsthand knowledge. It's Redwood up in Santa Rosa. And they just, you don't hear a lot about them. They just go about their business and they're just growing, growing, growing because they have there's a lot of affinity toward that credit. They just do the right things all the time. But, they're not a celebrity credit union where they're out spouting all this stuff. They just go about their business and they go about it very, very well, and they focus on what are the products and services we can wrap around our members beyond just the checking and savings account and the loans. It's, can we do insurance, can we do wealth management, a whole suite of services that you've got members buying these products and services somewhere else. How come they're not buying them with us? They just take that very simple approach. And then another one, I just thought it was kind of, if you thought about it more from a wording or a phrasing, it's a credit union in Vermont, and it's got family in it. It's not Family Heritage. I can't remember the name of it, but the thing I liked about their mission statement is it's basically prosperity through cooperation. And what the way they approach it is they say, listen, we want you to be all in with the credit union, but the more you cooperate with us, the more you participate with us, the more prosperous we can be. And so that's very important. And they have what they call a member, basically a member bill of rights, the things that you're entitled to as a member. Things like obviously being treated with respect, good customer service, timely response to your inquiries and stuff like that. But they also have a list of obligations we expect of you as well too, and that is to use our products and services to promote the credit union. So I just thought that was really a unique way from a more of a messaging perspective.
It's the cooperative spirit, right? Because our members,
Exactly.
I think sometimes we forget that they're part of our story, and
Yep.
we can do better there. Yeah,
Yep.
great.
Exactly.
As you know, Mike, we end, and thank you for all of this information. It's so helpful. It's hard sometimes. I could talk to you for hours, but I try to keep these short because BD people and community impact people are out on the road, beating the pavement. But we end on a social spotlight. What I'm trying to do is just provide more exposure to different things in the social sphere. Who do you follow and why?
So I had to overachieve and do three of them here.
Okay, of
So, but
course.
I've got different story for each one of them. Okay, so this
Okay,
will be
let's
good.
hear it.
Okay, so from a business perspective, on LinkedIn, I follow a gentleman. His name is Chris Nichols, Chris, tradition Chris, Nichols, Chris Nichols, and he's with this bank in Florida called South State Correspondent, or South, I think it's South State Bank. Anyway, they put together all kinds of information on business development, on products, on pricing. It's very strategic in nature, and he does these blogs, and it's like, Chris, I can't believe you're giving this stuff away. So it's just wonderful if you could go follow him. Now, trying to make Mike a human, I had two others that I thought I'd share with you, and these are silly. Don't write these down. But the first one is on Twitter. The Twitter handle I follow, it's called Orange Book, and it's this person. I don't know if it's a guy or a gal, who it is, but they're kind of a stoic, and they get you. They kind of cause you to think a little bit, and sometimes I think it helps me stay grounded. It's so easy to chase this over here or chase that over there, but sometimes you need a little bit of that kind of come back to center earth. So I like that person. And then of course the other person in my life is the 12-year-old Mike, the adolescent whose maturity level has not got anywhere. So I do Super 70 Sports on Twitter because he's just kind of a funny guy. So trying to make
Oh,
myself
those
a
are
little bit
great.
more of a human than anything else.
I don't know any of those three, so I will check them all out.
Yeah.
Awesome. Well, thank you, Mike, for joining us.
It's been my pleasure anytime.
Great. Thank you. And thanks, everyone. We'll see you next time.